happens in microseconds or milliseconds.
Maybe they don't have understood the risk well enough about, these new companies. How do you communicate around that?
So you have to know that it's no free ride. If you want to have a big reward, you also have to take a higher risk. And that's also we try to communicate. But how you do it and the speed and the regulation has changed enormously.
So one place that I would love to start is that you started your career at the Royal Norwegian Navy, Øivind. So how did you end up there? And did you really envision a career at sea at first when you started out?
No, actually not. My plan was when I went to high school that I wanted to have education in the Navy. So my plan was always actually to go to the Naval Academy and stay there for a few years and get some experience. And then leave there and get some more studies from more civil life. So in the Naval Academy has a very high reputation in educating managers and leaders. So that's actually what I wanted for a basis to actually start that career. And also since that's a paid school and you also get money when you work in the Navy, that's also to save up money for the later studies.
Okay. But looking back at that experience, what do you think are some of the biggest lessons you learned from that period?
Well, I think the biggest lessons was actually two things. First of all, I had to learn a lot of structure. It was a hard study, it's a tough school, and you need to deliver every day. And also management. You have both a lot of theoretic management lessons, but every day you also train in actually become a manager. And when you're done the school, and I actually went into the more operational department, as for me it was on a Navy vessel, then already in a very young age, you get much responsibility and a lot of management training already from the age of 22, 23.
Definitely. But after that, you ended up pursuing law. Was that also a clear plan, or could it have been something else in a different life?
It could have been actually one or two. I was considering either go to law school at university or studying economics. So why I ended up in law and not economics in the beginning, that was more coincidence, more to say. So, but after that, I also had some financial education after that as well.
Okay. So how was your first encounter with Oslo Børs or Oslo Stock Exchange? What led you into that?
Well, the reason actually was when I went to law school, I actually specialized within maritime law since I had the background from the Navy. So, but when I was a very young associate in Vonheim, law firm, one of the largest law firm in Oslo, at that time it was one of the local broker firms called Nuka Securities that went bankrupt. And another associate and myself was actually put on that case, and we worked for that for several years. And then actually more automatically have changed from actually shipping law until securities law. And then the path actually was taken from me. I love that area and have worked with stock exchange and securities ever since in different forms.
I heard you give a presentation where you said that some of the first things you learned at the stock exchange was that trading is easy, but settlement is the hard thing. Can you expand on that and what you really mean by that?
Well, yes, I can do that because trading, it's quite generic, and it's actually only to find a buyer and seller within the trading system. And then you find the price match, and everything is done in respect to trading. But then you come to all the clearing part and settlement part, and you have it have to be settled through the Norwegian central bank, and it's actually to be met the seller and buyer. They have to meet all the obligations. So that's more technical and more structured part of it. So it's more complicated actually to do the settlement than to do the trading. And the trading can take place in milliseconds, maybe 2 microseconds, but the settlements at 2 days procedure to actually get the shares and also get the money for the shares, and also do the security in between with the clearing sites that you are secure that will have your shares on money.
If you just look at stock exchange in general, it's a very simple question, but I guess many people are not so sure. So what is the business model of a stock exchange? Where does it earn its money? And is it different from exchange to exchange, or are all pretty much the same?
Well, the bases are pretty much the same, but then every stock exchange have a little bit different business models. At least many of them have that. But the basics for most stock exchanges is that there are two business areas. It's the listing side, where you actually have the companies listing, and they pay an admission fee and also pay an annual fee to have the stock listed on the stock exchange. And then you had what we call the secondary market, which is the trading side. And that's actually the investors trading the shares that also have to pay a fee to the stock exchange. In addition, you also have the market data with all the indices and things like that. You also pay for that. Also is a revenue stream for the stock exchanges.
How has that changed the development over the years? Because you started, you have a lot of experience now running or working and now running a stock exchange. Has something fundamental changed over the last 10, 20 years, or is it more of the same development as it always has been?
It's extremely big changes. The fundament is still the same, that you buy and sell shares and have companies listed, and that was the same 25 years ago as it is today. But how you do it and the speed and the regulation has changed enormously. When I joined the stock exchange about 23 years ago, we just went from being a governmental owned stock exchange to be privatized and had private owners. We had up to 830 owners at the most. And then it changed a lot also on the regulation side, that from quite a little local regulation, we didn't even have listing rules when I started on the stock exchange, to now a lot of EU directives and regulation that controls all the securities and stock exchanges in Europe. And that has been a very big changes. And we have also gone from being more like a regulator back 23 years ago to now be a more commercial stock exchange that actually is there to actually be digitalized trading venues for the customers, instead of being also like to the right hand for the regulators in Norway, for Norwegian FSA. So much more of the regulation has gone from the stock exchange to the governmental side, to the public authorities, and we are more here actually to take care of our customers and give them the best products and the best prices that we can offer for our customers at the stock exchange.
Interesting. So how can we describe Norway as a capital market today? Because obviously we have some very, very strong sectors that we rank number one in the world, probably. So how would you describe sort of the uniqueness of the Norwegian capital market and our strong suits?
The Norwegian capital market is not that big because we're a small country, but still we're very international. And so if you look at the ownership of the market cap on the stock exchange of the listed companies, around 40% is owned by foreign international investors. And that's quite a lot to be such a local, small stock exchange or small market as we are in Norway. And up to more than 70% of the daily trading is done from abroad, from international investors. So we are very international and got a very good footprint all over the world, not only in Europe, but actually globally. And especially in, as you said, what we call our traditional or our strong sectors. And that is mainly the energy, especially oil and gas business. That's, of course, strong in Norway. But also the shipping side, the shipping business. We are the largest shipping stock exchange in the world. It used to be the New York Stock Exchange. But when it comes to number of listed companies, we are now past New York Stock Exchange with a good high number. So we are by far the biggest stock exchange in the world when it comes to shipping in respect of the number of listed companies. And also, we are also without competition, the biggest stock exchange in the world when it comes to seafood companies.
Definitely. Is that something that is important to continue to grow on? Sort of like have it as a branding for the Norwegian capital markets, or would you like it to be more diversified?
No, it's definitely important, and we are more diversified now because now we are part of the Euronext group, which actually is the biggest stock exchange group in Europe when it comes to the number of listed companies and the liquidity pool, as we call it, the number of trading in Europe. So there are no other stock exchanges that have more trading in our listed companies than we have in Euronext. So we have quite a broad diversification into that group. So we are very specialized in these three sectors. But even though we are getting also now bigger and bigger within tech sectors and tech companies, we've seen a lot in the ESG space. where the clean tech companies has been listed quite a lot the last couple of years, 2 or 3 years. So we see we are more diversified, and when we look at this on the group level that we like to do, we see we have all the specters of companies in Oslo and Euronext.
Talking about Euronext, I guess you remember one day at work during Christmas better than the other ones when Euronext approached you. How would you describe that process, and how was it to get approached on Christmas Day in Norway at work?
Well, yeah, it was a little bit of a surprise. It was actually, we were informed the 22nd of December 2018. So the Christmas was on Monday, so a lot of us had taken Christmas holiday already. And we were informed that Euronext had now control over the majority of the shares in Oslo Stock Exchange. So it will be a process going forward. And then when this was announced on 24th December, because Euronext listed and had to inform to market on that day, because market was open in Paris on 24th December. Then we very quickly after had a phone call from the CEO of the Nasdaq Nordics that also wanted to attend to try to fight for the stock exchange. So this was quite a hectic and different winter that we experienced in 2019. But somewhat it was quite fun to see that two large stock exchange groups actually were fighting over a little Oslo Stock Exchange and wanted to buy us, and that to see the price went up and the offer went up. So we felt a little bit honored by to see this happening. And I think the result was very good, that we've shown into the Euronext group that we also contribute being important part of this Nordic ambition that Euronext has. And also we also have great benefit of being part of one of the largest stock exchange groups in Europe. And it comes also the liquidity pool, the investors, and also actually have, as I said, more diversified and broader portfolio of companies to actually offer our market participants.
If you look at that acquisition process, what do you think are some of the biggest lessons you can take from it? Because obviously it's a very big decision, and I guess it's a lot of work that goes into it. Is it to have a lot of focus on due diligence? Is it a lot of communication? How does that process go as well as it should? Because it's not a given that every acquisition turns out to be great in the end.
No, I think as from the target company, as we were, I think the most important lesson that we tried to do also the best as we could, when there were two parties actually giving offers and actually fighting for us, it was actually treat them equally, because you don't know the end result. And then it's important that you don't actually give one the opportunity more advantages that compared to the other, that you treat both equally and you act professionally. And actually, this is actually an ownership question. So as an administration, you should not take too much part as well. You should offer what I needed, and also act on the instruction from the board and the owners, and actually just be positive and see the results, because this is very normal situation. And what was interesting for us is that we are the takeover authority in Norway, so we have seen hundreds and thousands of takeovers from the stock exchange, and suddenly we were the target and actually experienced the same that our customers and clients have done for many years. So that's also an interesting experience to have.
Definitely. If we take a company's perspective and they are in the mindset where they want to get listed, what are sort of the different options they can take looking at Oslo Stock Exchange? What platforms do you have? Because there's obviously some different platforms you organize.
Yes, we have 4 different platforms. We are starting with the NOTC list, which is a self-regulated over-the-counter market. Very little regulation, very few requirements, and it's also outside the scope of the regulators and FSA. So this is something we run completely by ourselves in an orderly matter. And some companies start there when I don't expect too much liquidity, they don't want too much financial reporting, they don't want to inform the market too much, because maybe only a few investors at that time. And then we have the next level up is the growth market, the Euronext growth that we have seen has been very popular last 2-3 years. We started that trading venue back in 2016. And it's a so-called multilateral trading facility, MTF, that is regulated by the MiFID directive, like so from the European regulators. So this is something that a lot of European stock exchanges and also other type of venues are running. So this is first of all meant for growth companies, maybe in the pre-commercial phase that are still growing. I want to need to raise funds. I want to do that in the public market. So that's for smaller and new companies. And then when they are getting more suitable for the main board, they can then apply for an uplifting to the main board. And some companies go directly to the main board, which is what we call a full stock exchange or a regulated market in the terms of the regulation. And where you have more strict requirements to be listed, where you need a full prospectus, you need more shareholders, a more larger size of the company, and you also need 3 years financial history to be listed there.
So what do you think are the biggest or the most typical reasons why companies don't manage to get listed? Is there a pattern here that they're way too immature or don't have the right not to come to the right stage, or is there any patterns you have seen when companies don't manage to get listed?
Well, it can be several things actually, but it can be that the market does not believe in the story, because the most of the companies that want to do a listing, they need funds and want to do a fundraising, and I think that most of the companies that not reach the point of a listing is because they're not able to raise the funds, and then it's because the market will not invest in their company, either because of pricing or they don't believe in the story. And some companies get feedback also from us that they should change some of the hope to say appearance. Maybe that's we don't believe in the board is sufficient to be a board for listed companies. It might be the management that we have questions about, or it could also be that we also have questions about the financials. Maybe we don't look at or believe they have enough financials muscles to actually to go forward as listed companies, and also maybe not have the organization to do all the requirements and take care of the market. So it can also be that, but normally then they will have that feedback quite early in the process, and we also, in most of the cases, we see that then they turn around quite quickly and put in place either a new board, new management, or new internal procedures to actually handle that. But I think mainly the companies that want to do a listing and not able to do it is because they're not able to actually sell their story and raise the funds in the public market.
You also run your own program called IPO Ready. Why do you run that program, and what's the biggest lessons companies get from participating in that program?
Well, I think that's something we started last year, and it was quite a big success. So we'll do it this year as well. And that's something that we have learned for many years, both in Oslo and the rest of Euronext, that we see that companies that apply for listing, they are not set up. I don't understand how it's the differences to how to be a listed companies, because it's quite easy, in my opinion, to be a listed company, but you have to know how to do it. So we're actually setting up the IPO readiness to actually smoothen the process, both in respect of admission, what you have to prepare, what you have to do, but not at least how it is to be a listed company after you have actually been admitted for trading. How are you going to treat your market? How are you going to treat the stock exchange? How are you going to act towards the regulators in the respect of financial reporting, with ad hoc reporting, inside information, and everything you need to know? Because it's not like brain surgery to actually handle this, but you know how to do it. So we have set up the course actually to prepare the companies, both for the listing process and also to live as a listed company. And then, so we believe through this course that we do both together with our colleagues in Euronext, but also together with the local advisors in Norway, that the company are much better prepared to actually to handle all the obligations you will have after you have been listed.
Do you choose the companies, or can anyone just sign up to get invited to the course, or how does that run?
No, everybody can apply, but we choose the companies. So we will look into it, and if we believe this is a company that maybe should wait 1 or 2 years or more before they should go for this course, because it should be a little bit near in time actually when they are going this course, and actually when I can apply and be ready to apply for admission to trading. So we do screening. But last year, all of the applicants were, in our opinion, suitable for this course. So we accepted all of the companies last year, and I think it's more or less the same this year.
Very cool. So we already talked a bit about Euronext's growth, but obviously the last couple of years there were many new listings and market conditions, etc., has shown that many of these companies have getting their value drastically reduced. How do you communicate around that if some people say it's like maybe they don't have understood the risk well enough about these new companies, which obviously are in a growth phase and don't really have so much revenue that maybe other more mature companies have? How have you viewed that discussion that has been going on?
That's always a difficult also the discuss message to give to the market. So we try our best, and always, like when we have interviews or in the media, and just like when we are talking now, to talk a little bit about it and try to give the message. And it's always a risk to go into kind of financials and also into the securities market. And you have the old saying that it's risk reward. The bigger reward, the risk is also the same or higher. So if you want to actually do some safe investment, don't go normally to a pre-commercial tech growth company. Then you put your company in the blue chips value company. And so you have to know that it's no free ride. If you want to have a big reward, you also have to take a higher risk. And that's also we try to communicate. I normally try to set up a portfolio that is diversified. So have maybe, if you like, and want to take some risk and actually see the possibility for reward, you can put that on the top. But then you also must be prepared to lose that money. And also what I normally say, like try to put on a diversified portfolio as a pyramid, where you start maybe some risk, if you want, shares on the top, and then build a more solid platform on the bottom where you maybe have some blue chip companies, and even under that maybe some index funds, and maybe some money in a saving account in the bank. If your washing machine break or something, you need to have also some money in the bank. So try to be careful and don't think that take too much risk. Don't take a risk that you cannot afford. And as I said that because and you mentioned also that we have had a hit on the tech sector on the stock exchange, and that's not because of the growth. It's not because of the admission processes or regulation in Norway. This is something that happened all over Europe, because we have a very difficult situation in Europe with the war, we have energy crisis, we have inflation, and that has hit the tech sectors all over Europe. So the Euronext growth tech sector has not dropped as much as many of our competitors around us. And but it can happen, and then you have to also be careful with the investment. And what we see is that some sectors are still strong. For example, in Norway, for the oil and gas and the shipping, some sector in shipping is very strong due to the situation we are also in Europe. So, but I think the main message from our side is that to the investors, be careful and don't take more risk than you can afford. But our job at the stock exchange and our requirement, what we have to do in respect of our license and the regulation, is that make sure that the risk is communicated from the companies. That is the main and requirement for the stock exchange. So we are following up closely the companies to make sure they, both in financial information that is handled by the FSA, but also everything continuous obligation for our companies are communicated to the market, so the investors can have the grounds and all the information needed to do their investment decisions. But in the end, it's of course up to each investors how they invest and how they decide. But we try to communicate it as best as possible, also that don't take more risk than you can afford, because the market goes up and down, and that's how it always been, and it will be that going forward. Over time, it will always increase in connection with the BNP and everything that you see that for several years, that the financial market will over time increase, but it will go up and down in waves and cycling.
But if I understand you correct, and that you also push the companies to try to communicate this more and more, or do you feel like they're already doing a good enough job? Then it's about the investors really understanding the risk, or do you feel like you can always improve on the communication side?
Well, I think some companies are extremely good at this and have a lot of experience, maybe have been listed for many years. So I think they do it in the perfect way. But other companies need more training, and then we try to both educate them, talk to them, and if we believe also they're not doing their job properly, we also have the possibility to give them fees. And that happened also from time to time when we believe they haven't given sufficient information to the market for the investor to make their decision. So we are both trying what to say carrot and the whip, that we both try to actually encourage companies to actually do a better job, and most of them do their best. They are actually really eager to do it, because I know it has a financial value for them as well to give information to the market. And if they're not able to do that, we try to follow up with education and courses. And that's why also the IPO readiness, so they actually have the basis for to give the information to the market already from first day when they are listed. But we also have courses also for companies after they've been listing and follow up, and they can ask for meeting with us. We easy problems. I invite them for meeting with the stock exchange, so actually to make sure they do this better going forward.
How have you viewed this recent discussion about sometimes, the retail investors are overlooked when companies are in trouble and need to raise more money again? Is that also something you have strong opinions on, that it's very important to try to treat every investor as fairly as possible all the time?
Yeah, yes, we believe so. And that's why we put it in our own rules, that actually it's a requirement for actually equal treatment. So this is normally, if you look at the legal side, there's an issue between the shareholders and the company. But we have actually, since we already do the supervision of the disclosure requirement, and also we are the takeover authority and have quite close contact with the companies, we also have said that we will also do an assessment of equal treatment of shareholders. And if we see some material breaches, then we will actually react. But normally we will say that this is an issue between the board / shareholders and the company.
Switching gears a bit, talking about leadership and so on. But first question was, when you got the chance to join as the CEO of Oslo Stock Exchange, how easy was it for you to say yes?
Very easy. No, that was very easy. I really wanted that position, so that was definitely easy to say yes. So, but what I didn't expect or didn't see coming, I knew that we were starting with a big integration project, because we just become part of Euronext. So I knew it would be a really hectic year. I'm looking forward to that, because a big project is something we like to work with, and I think we're quite good at it, both in Oslo and also in Euronext, very professional in doing this big integration project. But what we didn't foresee, either from Oslo side or the international side in the group, was that we, just after I have taken over or started the project, that we had to send everybody home because of the COVID situation. And when also we had COVID and a big project on top, another thing that we didn't expect in that situation was that we were going to have the most active listing period ever on the Oslo Stock Exchange. So it was like a Kinder egg with three things at the same time. We had the big migration project, we had the COVID, and then we had an extremely high number of listing applications to handle at the same time. So it was quite a hectic 2 first years when I joined as a CEO at Oslo Børs.
But how was it to run those projects remotely then? How difficult is that when you have different time zones, maybe different culture, etc.?
Well, I think that was doing very well. It's of course something that you have to learn from both sides. Actually, that there are different culture, things mean different things when you say a thing, things like that. But that was quite interesting to learn about different culture, and it's not only a French culture and Norwegian culture, because we are not like we're saying, we're not the French group, we're not the in the Dutch group, even if the company is incorporated in Holland. We are an international group from Italy, Portugal, Dublin, Paris, Amsterdam, Brussels, Oslo, and Copenhagen, and so on. And that's really interesting to learn, and how to actually to be a little bit diplomatic and learn about the culture, and how to actually work as efficient as you can. And actually, I think that the more different cultures and more geographical areas we cover, it become more and more easy to actually handle this, because people are now so into that we are a multinational group and has to work in the matrix model efficient as possible. And that's also one of the beauties with this group. So when we attract younger talents now to work with us, we see that one of the reasons I want to work with in the Euronext and Oslo Børs is the possibility to work with a lot of different culture, a lot of different geographical areas, and have colleagues and friends all over Europe. So that's actually been a very interesting part of it to learn about.
Very interesting. If you look at which type of people you want to hire to work for you, are there any specific talents that you hope to be more attractive to and try to bring into the Euronext system?
No, I think we are very concerned about being diversified. So here, everyone who has a talent and have the competence we need, I'm very much welcome to work with us. So no limitations there.
But also, if you look at the product roadmap, I think you said that you want to roll out more ETFs right now. What are some of the most exciting projects you see not right now on the roadmap ahead?
Well, we actually, yes, ETFs is one part of it, and also the derivatives market that we work a lot with these days in Norway, because traditionally the derivatives market in Norway has been quite small compared to our equity market and the bond market. And we have not been able to actually grow that market as a standalone small stock exchange in Oslo. So that is something we prioritize now to actually try with being part of Euronext, which is quite big, is very big in the derivatives market, to actually see that we can use the synergies and benefits from being part of this group to also grow the derivatives market. And the ETP products is of course part of this. So that's a prioritization, and also one thing we work with quite strongly these days is also actually to integrate fully the Italian stock exchange group into the system. And by acquiring the Italian stock exchange, Milan Stock Exchange Group, we also have got our own clearing house that we are setting up now for derivatives in Norway and for the equities for the rest of the group. And also we have moved our data center to outside Milan in Bergamo and things like that. So we have done a lot of things, but just for locally for Oslo now, I think one of the most important things is the derivative market, and also that we're also working very hard, and it's very important for everyone these days, is the ESG perspective. So I think we were one of the first stock exchange group actually that took the ESG as a strategic point directly into our business strategy. And that's something we don't take for granted, and we actually have to follow the rules and requirements ourselves for the more advice, because as a listed company, we know how to deliver also ESG, but we also try now as best as we can, because it's so important for the investors and then the listed companies that we have a good products and a good system for companies to deliver on both on reporting side and on the products on the ESG side. So that's something we work quite hard with, because I think that a market venue that don't have good product spectrum and procedures for ESG going forward will actually lose ground.
Makes sense. Some personal questions to wrap up. What are your favorite activities to do to recharge your batteries? I know exercise is important to you.
Well, yeah, I like to exercise, so I try to have time for that. I like to be outside, to go to the mountains, be skiing, go out running, cycling, and of course be with my family and just relax.
And what do you typically read to stay up to date? Do you have any favorite sources you tend to go to?
No, when I read, as you say, stay up to date. If you mean for my work, it's very different. But we have a lot of regulation and requirements and everything that's happening in this space that I read. I also read some financial books, and actually some on, especially maybe in the corporate segment, especially for me, because I'm interested in that part from for many years. But nothing special. But it's a lot of reading, but a lot coming from, I say, from Brussels with the EU space. That's a lot of happening these days. Either it's on the market data side or on the kind of regulation that we have to be updated and up to speed on.
I can imagine. But given you touched upon some financial books, do you have anyone in particular you can recommend to the audience that you find fascinating to read?
Well, I'm not especially one favorite or not, but what we still think actually, if you want actually a book that is both like a novel, but also quite important, what we see is still important, is a book that is, what is it, 7, 8, 9 years old. It's what to call the Flash Boys. That actually quite interesting because it's discuss actually the importance of actually the latency questions that you have to have up to speed trading system. You have to be close to actually the traders and their actually front system and things like that, and servers, and how this works. Because as you said, it has developed a lot the last 20 years. When you were trading in the market, when you could pick up the phone, and you also had we go back to the beginning of the 90s, you had maybe 300 trades a day. Now we're talking 100,000 and more in the Oslo market. And it happens in microseconds or milliseconds. And then it's the latency question that where you put your servers, where your customers, clients have their servers and everything. And that's quite interesting to see actually the fight for the speed, actually how important that is for the market.
Sounds very, very interesting. So just the last question, since we have many people listening that want to have an exciting career, do you have any good career advice, or have you ever received a great career advice in terms of how have you viewed your career, and you also try to share to other ones who come and ask you?
Well, I think what the advice I give, and I also think it's I think it's a good advice, is to follow your heart. Because if you do something that you're interested in, then you will be more passionate, you will work harder, and then your career will come more automatically. So choose a career way and do something you like to do, and then I think the success will come much easier than you do something that it's more expected of you and you think it's the right way to do, but you don't like it. That will never reach the top, I think.
Perfect ending, Øivind. Thank you so much for taking the time. It was a pleasure hosting you.
Oh, thank you. Thank you for your time. It was nice to be here.